third week of being the chief executive trader of DXS. So I thought about just sharing my my winnings and my losings with you before we proceed to anything else. Okay, so this is what I've done the last 3 weeks. So this was week 1, week 2, and week 3. Okay, so you can see on week 3, there's a tiny bunch of smaller positions. So this is a strategy I'm busy checking out. So there's going to be quite a few of them. I'm going to explain to you the reasoning why I'm actually putting in live trades. So when I sent a couple of shorts over the socials over the last few days. And it's weird because once you don't take any positions, your trades seem to go fantastic. You apply your analysis, and then before you see, on paper you're making money. But as soon as you put the live trades, you start losing money. So that is why you actually have to have some skin in the game. So hence the reason why I'm going to put in the live trades over the next few days. So I'm going to share the reasoning behind the analysis. I'm not fully comfortable in explaining everything yet. I'm going to try and explain to you the concept of it, and then you got to wait just a little bit more time so I'm getting a little bit more familiar with everything. So just to share some stats, so in total in 3 weeks, I've done 50 trades. So I've got a win rate of 26%, which I want to obviously get closer to 40, if I'm lucky at 50%. Average trade duration, how many longs, how many shorts. So in week 3, I really decided to change my strategy for one particular reason. So my previous analysis that I've shared, let me just open up one year, for example. So let's, for example, say this one here. Oh no, this is one of the previous strategies. So let me just open up one of these, for example. So as you can see here, I was targeting for maybe 2 high ranges. And I think the market is very choppy, guys. Look, I'm not trying to beat myself up on this. Like I said, I'm learning. But I try not to be too hard on myself because this market is difficult to trade in currently. So in my opinion, it's too late to short. We can't really go bullish yet. There's just too many variables at this point. So I'm trying to be as diplomatic as possible. But one thing that I've gotten to this point is I love trading. First of all, I like the analysis of the chart and then the excitement of putting it in and waiting to see what happens. But I'm not particularly sad or super happy when I win trades. So what I've seen with these kind of analysis, I could see that my entries were good. The trade would go maybe halfway there, and then it would start reversing again. So that told me that maybe my position sizes or my point A to point B positions was too big. So too optimistic that it's going to go too high, and too optimistic is going to go too low. So then some years ago when I first started trading, I started looking at, they call it the ICT strategy. So it's mostly applied to Forex. So I can quickly share to you what that entitles. Before we go to that direction. So this yesterday was super fantastic. It was my first, call it, masterclass with Armin, one of the founders of DXS, and in 1 hour I learned so much, and already trying to apply the principles of what I was taught. And I would have loved to share the video with you guys, but then when I start editing the video, I discovered there is some sound issues. So I'm going to ask him pretty please so we can do it again. I think it's very, very valuable what he showed me on some charts, and that's definitely something that you guys need to take a look at. Especially, I applied the macro approach by looking at the various aspects, but I think one thing that I haven't done is going so far back. And one thing that really stuck out to me is Armin said, the market never forgets, and that is very, very true. Okay, so back to my ICT strategy. So you guys can go, more than welcome to go on YouTube channels and learn a bit more about it. So basically what this entitles is, you have to discover, well, first of all, you need to be on a 4-hourly time frame, and you need to look for ABC patterns. So ABC can be either this is the A leg, the B leg, and the C leg, or it can be the A leg, the B leg, the C leg, whatever the case may be. So first of all, you need to determine which direction this goes. So this, you can obviously see this portion here is going bullish. So that means that when we're on top of this leg A and leg C gets close to one another, or once we've got a top on leg A and you get a little liquidity purge on the same level than leg A. So once you start getting that liquidity purge, there's that little wick there, this little candle here, you start going to 15 minutes. So there's various time frames that you go. It's 4 hour, 15 minutes, or a week, 4 hour, or 1 day, 1 hour. So it means if you scan your charts for 4 hours, then if you see your signal, which we just showed you, then you go to 15 minutes. So what this entitle is, so you get your liquidity taken out here. You can see these are all fair value gaps. So a fair value gap is basically, if you zoom in here, it's the top of that little wick to the bottom of that little wick. So this means that the price it's a fair valued price. All right. So a lot of people will start trying to fill these gaps into taking on new liquidity for going upwards. All right. So what this entitle is, you get your liquidity purge, you change direction, and once you see a break in market structure, which I always sometimes do this, then you see here, okay, you've got a breaking in market structure right here. So then you wait for the price to pull back, and then you start looking for fair value gaps above 50% of your Fibonacci. All right, so I want you guys to go and learn the ICT strategy, because one thing I've learned here, which is very important, is auto blocks and fair value gaps. So that's, tiny little detail, which I think I've never gotten a hold of until very recently. Okay, so basically what this means now is when we're going to go in this particular area, this is going to be your discounted area, and this is going to be your premium area. So it means if you're going to want to go short, everything north of your 50%, it's the discount, because once you start paying below the 50%, you start paying a premium for your shorts, and when you start paying above your Fibonacci 50%, it's a discount. So once you start looking for fair value gaps above or closest to your 50%, okay, so now what you typically do is you would go take a swap. I just did the trade, but I got stopped out because my stop loss was just too low. But rethinking of just retaking a new position. So basically what I would do is I would look at a little order block on this value here, close to where we are currently, and I would place in a short for this particular instrument that's here in the Swiss franc, and I would go slightly higher than your recent liquidity sweeps. And then a safe example for a reward is always at your -2, roughly here, to take out the liquidity at that particular level. So that is what we want to do. We've got a ratio which is fantastic, 7.6. So before you guys try any of this, I highly recommend do the ICT studies first. That's what I'm busy doing. And then backtest it. So what you would do is go back to 4 hours and just take a random position way in the past. Take a random position and then start using your replay tool and do your analysis how you would think it would work, and then just play to see if it worked in your favor. So then you would, see tiny little things that you haven't seen in the past. But also what I would highly recommend is looking at your fair value gaps, because this to me was a game changer, guys, seriously. Okay, so this is it for me for this week, week 3 as your chief executive trader. We are at a loss of $120. So I don't want to burn through it too quickly. That's why I do small positions until I get the hang of it. And then I'm going to start slowly increasing my positions. Okay, one thing that I've also seen is you have to absolutely switch off once a while as well. Look at your charts, do your analysis, but don't stare at the charts the whole day, guys. Get some exercise, get some sleep. I personally do 5 hours of cardio at least per week. And then I also got a little new routine for every trade that I lose. All of these ones I either have to do 10 pull-ups, 50 push-ups, and 100 sit-ups, either one of the three. So at the end of this, when well, let's hope I haven't lost all this money, but when I have lost the money, at least I'll be fit and built and ready for any other adventure. So I try to always look on the positive side, and if I lose, at least I'm getting him some exercise, get him a good amount of sleep, eat healthy. And until next week, so wish me luck. If there's anything you guys would like to add to my comments, please do so, subscribe, and once a while give your analysis to me as well, and tell me what you think I did wrong, and let's work on this together. So great news on DXS side. They're going to merge all the BSV and the USDT liquidity very soon. So our pools is going to be much bigger. So the guys that's already profitable can take large chunks of profit. So that's it for me now, guys. Lovely week ahead. It's National Women's Day here in South Africa. So any ladies perhaps watching from here, happy Women's Day. We are better people with you guys in our lives. So I wish you all the best, and until next week. Peace out.